Don't be transactional. How to prepare to fundraise, how to build your community, how to do go-to-market token launches.
Yeah, 10 years of being in this industry and working extremely hard. This is what the luck is.
Make your opinion based on the facts rather than someone's subjective opinion.
Hey, what's good, Kolo friends? It's another Kolo Talks on our YouTube, and today we have a great guest from very well-known company that you've all been hearing about, Gate.io, Laura, Chief Ecosystem Officer. Welcome. Laura, what's up? How is it going?
Hey, happy to be here. We actually recently rebranded from Gate.io to Gate.com. People are still getting used to it, but yeah, we're going mainstream, we're going international, so Gate.com is the new name, and thank you for having me here. I'm super excited to be, and I'm always here to spread alpha with everyone.
Wow, that's amazing news. Actually, Gate.com sounds even better than Gate.io. So guys, for those who still saying Gate.io as I did, remember Gate.com is the new name. Beautiful. So Laura, let's maybe not make it long introduction and start straight ahead with the questions. And what I wanted to ask you about is about your title. So you are Chief Ecosystem Officer at Gate. And how would you describe your role at Gate.io and what exactly you put as your day-to-day activity? And like, what are you doing in the company?
Sure. So actually I have a dual role within the exchange. So I'm Chief Ecosystem Officer at Gate.com. And I'm principal at Gate Ventures, the venture arm of the exchange. And these two roles play very well together because my core kind of responsibility is to find interesting projects Gate Ventures would invest in. That would be anywhere from seed to pre-seed. We usually do tickets anywhere from like 100K to $1 million in industries like DeFi, stablecoins that I'm super passionate about, RWA, infrastructure, AI, and so on. And once we invest in these projects, this is where the Chief Ecosystem Officer title comes in, as I make sure our portfolios get the best out of whole Gate ecosystem. And that would be helping with marketing campaigns, trading campaigns, also helping them if needed with listings. So basically anything to make sure our portfolios get the best treatment. This is kind of my responsibility. So I would say 50 to 60% is working on scouting interesting projects, working with early stage founders. Then another 30% or so is that post-investment portfolio kind of management, dealing with our companies, helping them out. And another 20% is education. We're coming to conferences, podcasts like these to basically educate the industry. So first of all, founders on how to prepare to fundraise, how to build your community, how to do go-to-market token launches. Because again, as an exchange, we know a lot about successful TGEs. And yeah, that's why basically I'm here to educate and kind of spread awareness of how this industry works and how it's evolving, because it's evolving in such a fast pace.
Oh, and that's actually a very, very cool statement that education is extremely important, not only for the users, but for the founders as well. Because, in our journey, we also have seen many, many, many founders who just don't know how to properly launch their token, how to prepare the TGE, how to make everything. And then we see unsuccessful projects, even though they had really, really great tech behind them and great minds behind them. So it's very cool what you're doing. And can I ask you, like, what was your journey to actually get to this point? Because I saw on your LinkedIn that you've been in crypto for a very long time, but what was, the first steps that you make to actually switch to Web3 and then make such a successful career inside of this industry?
So next year, I'm going to be celebrating 10 years in the industry.
Oh, wow. 10 years.
Yes. So I joined the space in 2016. And I mean, honestly, it feels like a century ago. I was studying physics. So back in the day, I had a lot of really smart classmates who were telling me about this magic internet money called Bitcoin. Unfortunately, back then I was a broke college student. I couldn't, afford to buy a lot of Bitcoin, even though I should have, or convince my parents to be like, sell the house, take the second mortgage, let's go on in crypto. But I made a few small steps with in this space, started helping projects with launches. So I did one of the first ICOs. And from there, I started to be basically a marketing professional, working with projects, helping, advising them a lot on token launches, how to prepare that, how to build a community. From me being a freelancer, it grew to running an agency. So I'm not actively involved anymore. There's still my amazing agency, LK Consulting. I have a CEO who's just doing an amazing job in that. And basically, as I was working with these clients, I realized that in the end, I would make more money from tokens and from advisory rather than from the marketing services. So I was like, I need to pivot to investing. And then I slowly became first an angel investor. Then I was a partner at Illuminati Capital, Dubai-based venture capital firm. And then last year, our paths crossed with Gate. And I was invited to join Gate Ventures first, and then later was kind of promoted within the exchange as well. So it's been a very, very long journey. You know, some people saying it's overnight success. Yes, 9 years into making.
Yeah, like it's always when you see the success, people are screaming, "Oh, it's overnight! Oh, you just got lucky!" And then you say, "All right, yeah, 10 years of being in this industry and working extremely hard. This is what the luck is." That's fair.
Exactly.
And you've been in the industry for such long period, and you've seen bunch of cycles. And like, how do you feel about the switches that we already see in market cycles? What been the key for you to stay relevant in such fast changing industry? So like every cycle we have different narrative, we have different thing that is going out there. And what's the key for you to actually catch the proper thing to stay relevant?
So when I first joined the space, it was a Wild West. There were no regulations. I remember the first ICO we did, it was free website, white paper, and a wallet. That's it. Like there was no company, corporate, nothing. Because again, it wasn't, the case. No one was focusing on it. It was more like a bunch of kids learning about crypto, seeing there's an alternative way how to start a business and fundraise, and like, yeah, let's give it a go. And now fast forward almost 10 years later, we have regulations, we have institutions coming in, we already have financial products like ETFs that are allowing TradFi to enter crypto. So the biggest shift I'm seeing, and it's a kind of slow trend that is with every cycle becomes more and more important, is this industry is maturing and becoming more mainstream, but more regulated. Some people hate it. I personally love it because it allows users to feel safe. Because yes, we had the crazy days of, 100x's, even like 5-6 years ago, but we also had so many rug pulls. And we had so many scams that there were no regulation. The bad guys wouldn't be charged because there were no base on what to charge them. Whereas right now, users and everyone who's entering the space is feeling more safe and secure, because if something goes wrong, there are institutions, especially like the European Union. I come from Lithuania, so I feel very, very safe within my jurisdiction that if something goes wrong, there's always a government body who can take care of me. And if we want to bring more VIP 2 to the 3, we need those regulations. So that's number one. I also see a lot of opportunities in just bringing TradFi people into crypto. So another good example is when you think about yield-bearing products. In TradFi, if you're investing in S&P, an average return annualized one is around 7%. And that's incredible. A lot of hedge funds are barely making 10-15%, and they're being championed. Where in crypto, there are so many opportunities to get 10, 20, 25% APY yield per year in a relatively safe environment. What I mean by relatively safe, you still can get hacked. A company can still go under. It's still a lot of risk, but within everything what's happening in crypto, this is one of the less risky ways. Of course, anything in your crypto, you can lose all your money. I need to make this disclaimer, and everything I'm saying is not financial advice. So if you lose your money, it's on you. Don't come blame me.
Advice.
Exactly. Like I'm sharing my own personal opinion, not my employer's. But still, coming back to the conversation we were just having, 15 to 20% for TradFi is incredible return. It's not someone hedge fund trading with a huge drawbacks. Is basically staking and kind of not having it guaranteed, but with having more trust that you're going to get the return. So again, TradFi coming into crypto, that's a very, very big narrative I'm seeing right now that we're focusing a lot on. And to kind of answer the first part of your question, how to stay relevant, read the news.
Read the news.
Follow the right news. Like, I genuinely stay relevant by just reading the news, reading what's happening. That's number one. Number two, I talk to people. I speak at a lot of conferences. I travel like, to all the major events, and I speak with a lot of people that are very, very smart people who are smarter than me. But I take everything what they say with a grain of salt. The issue in the space is everyone loves to have polarizing opinions, and in order to get seen, to get visible, and they all love to change their opinions as well. So I worked a lot with chaos, and I'm very cautious to listen to chaos opinions, because the question is, are they saying a genuine opinion? Are they being paid to say that? So you always need to kind of be aware where's the opinion coming from and why they're saying that. But once you follow the news or follow the actual factual things that are happening in this space, you can start seeing these patterns emerging, these trends that are happening week after week after week. For example, more and more institutions coming in, or let's say big funds are entering crypto, or someone starts selling, and you can make your opinion based on the facts rather than someone's subjective opinion. I would be very, very cautious to listen to someone's subjective opinion without trying to ask, why do they have this opinion, where it's coming from? Because otherwise you might get, well, rug-pulled in some cases as well.
Yeah.
I mean, it's not black and white, but I'm very, very cautious, even though I spend, I would say, 60% of my day just talking to people and learning from them.
Yeah, that's 100%. And can you make also like name us 3 other sources of news that you use on a daily in order to stay on track? So I would say, tier 1, tier 2, and tier 3 for you, main sources that you use to get the news.
So when I read news, so basically crypto industry is very much influenced by TradFi, and it's very much influenced by Wall Street, what's happening in the real world, not on the chain. So when I read news, I always focus on first understanding what's happening on a macro level. So for example, we recently had war starting in the Middle East that affected crypto space. We had Mr. Powell's speech yesterday that also affected. So first, I try to see what's happening in the broader world and how can it affect first the stock market and then consequentially crypto market. Unfortunately, still, crypto market is tied to stock market. Everyone is expecting crypto to be this kind of polar opposite, kind of the antidote to whole financial system, let's call it this way. But the problem is, it's not the case. Because we have institutional money coming in, they are controlling. So there is still a lot of ties. So I see what's happening there. And you don't need to look at anything in fancy. Even if you watch Bloomberg in the morning, it's going to give you a general understanding of the space where it's going. So basically what you need to pay attention is there anything that's going to happen, is happening, or going to happen very soon, is going to affect the stock market? And if so, by how much? Because whatever stock market does, crypto does usually 2-3 times more. So that's kind of one thing. That's number one. Number two, you need to look into geopolitics. So that is basically wars, any kind of civil unrest, because again, like last few years, it was super turbulent and it had huge effect on first stock market and then crypto market. And number three, then we go into niche crypto news. So actually what I like the most is the newsletter called Milk Road. I was on their podcast as well. They're, I think, one of the largest newsletter in the space, if I'm not mistaken. And they give you this very quick bite-sized kind of information of like what's happening in the space, how to interpret it. I also follow a few Substacks that I really enjoy that are also about the space. So there's Shira, one I really like, Ritual, another one, they're more chaos. But what they do recaps of the news and recaps of the best performing Twitter content everyone liked, usually around alpha. They talk about updates. So it also gives me a big understanding. And another kind of secret that I try to gatekeep that I'll share it now with everyone is Pantera Capital has their own newsletter. And they usually send an email, once like a month or so. And they have, especially for CryptAngle, it's the most incredible newsletter ever. If you're not subscribed, you must. It's usually in-depth analysis of the space, and that's so relevant. Usually they're either fund partners or senior analysts are preparing it, and it's just filled with such incredible analysis and like in-depth of information. And I know it's just a different outlook on the space. So I usually read whenever I get it, it's the first thing I read. I usually do it like once a month. So I highly recommend for you to subscribe. Literally just look Pantera Capital crypto newsletter.
And what about reading news on X? Do you usually browse X, or it's something that is not in your jurisdiction, I would say?
I always browse, but I feel like Twitter's algorithm changed a lot. And the algorithm works in a way that it pushes the content and it gets the most interaction. Because basically how the algorithm works is if the content is being reshared, retweeted, commented a lot, talked, it means it's a good content. And what content performs the best? Polarizing content.
Yeah.
Very out of there. So I don't use Twitter to get like the news or overview of the space. I use Twitter to more get interesting, a bit more polarizing opinions to read it. So it's more like a research thing rather than news thing. Plus, another thing is, again, maybe it's my feed and my feed is broken, but I see too many influencers shilling specific coins. And I'm like, why are you doing that? How much are you getting paid? And is your community liquidated? So as someone who is just entering the space, if they would ask for my advice, I would be very, very cautious to read this news. Because another very big piece of advice and kind of piece of thinking anyone can do. Imagine you're a trader. You're a very successful trader. You can make multipliers. Because in crypto, no one's interested for 10% a year. Everyone's interested when you're making, doubling your money per month. If you're actually doubling money per month, like, you're having incredible returns, why would you be sharing that?
Yeah, exactly. This is always my question to those people who share their how to get from 1,000 to million strategy and so on and so forth. And it's like, if you have such a great, structure to get this million, why do you share it with other, not using it by yourself? It only means that you're just selling courses or, promoting some product, not getting the actual profit. And, it's on the surface and people still getting caught by this thing.
Yes. So you need to be very, very careful who are you reading. So there are a lot of very good analysts that are sharing their analysis. And those I really like because they're the ones they might not be confident trading. Maybe they don't even trade, but they love to kind of look at the macro and love to share it. And sometimes they're really, really good pieces that help me to shape like my thesis or shape how I'm making my decision, especially for investments. But I never, ever trust what influencers are saying. Because if I see a specific coin trending, I always ask why they're trending. Who is pushing that trend? Because even like Twitter trending, when you see on the right, for like a couple of $1,000s, you can buy it.
Yeah.
So you have to be very, very careful where you're taking alpha from and make sure you're not exit liquidity. That's why I recommend read the news, look at macro, start to find patterns between, let's say, Bitcoin performance and macro overall economic performance, learn from that way. And again, not a financial advice. Do what you want with this information, but don't blame me if you later lose your money because trading is very, very, very risky and you can lose all your money. So you have to be careful.
Yeah. Dior, guys. Dior.
Yes.
All right. So since we covered this topic in such a wide spectrum, let's maybe move forward a little bit to VC side. And I wanted to talk to you about smart capital and market narratives that are happening right now. So where do you think smart capital is floating in 2025? And what sectors or narratives are gaining the real traction? So maybe top 3 narratives that you see are going to boom. Of course, not a financial advice, just your personal opinion. And what about smart capital? Where is it actually floating? How is it going on VC side?
It's a very interesting market right now because last cycle, VCs were making a bank. This cycle is not really a VC cycle. Let me explain. Look at the majority of token launches that happened within we have end of June. So within the last 6-7 months from beginning of the year, they weren't doing well. We had a little bit of kick with like few AI agent projects, but and pretty much that's it. And we usually see a very short kind of pump once the project launches, but the moment you have unlocks, everything basically starts to drop. And of course, because everyone needs to make money. So the problem is, on the macro side, the world is not doing that well. There is not a lot of free money to enter into the space. There's not enough liquidity. Last cycles, especially a few cycles before, there weren't that many tokens. Whereas right now, especially with memes, we get so many tokens that they're being launched every single day, but not enough people to sustain it. So what does it mean? nothing gets basically pumped. Nothing pumps. Everything pumps a little bit and kind of, and those few projects do well, and unfortunately don't stay in, all-time highs for that long. And then when you think about investment, kind of venture capital business, what is our business? The business is you find founders that you have high conviction in, and you usually invest in them, whatever, if it's seed, pre-seed, early stage from like 100K to like $1 million, and you expect what? 10x return, 20x return. Venture capital business is not 10% a year business. It's 10x business. You just expect at least one of those projects will do so well that not only going to get principal back from all your investments, but you're going to make some multipliers as well. And when you think of that, you understand it's not a charity. It's a high-risk loan. And VCs want to make their money back because usually have LPs, they're limited partners, that they have to show the returns. And now the market is very bad. No projects are launching, or if they're launching at a really, really kind of bad numbers. So VCs are not deploying. Majority of VCs move to liquid investment rather than venture capital investment. Those whose thesis allowed to invest into liquid, that's where they're moving. That means they're investing in top 20 coins by their market cap. They're playing with hyperliquid, but they're not doing venture investment. And another reason why is tokenomics. And this is a very interesting kind of topic of power dynamics and relation dynamics between founders and investors. Because what is the idea? What is the goal of the founder when it comes to fundraising? To get as much money as possible for whatever idea they want to execute, and make sure that investors are getting the tokens at a much later stage as possible. And what is venture capital business? To invest as little as possible at the best terms possible and get tokens as fast as possible.
Yeah, basically.
And basically, what does it mean? They both have different agendas. Of course, you cannot just break up. You have to have end companies and investors, but the power dynamic is very much one against the other. And right now, when I, coming from venture capital perspective, see tokenomics when I get 6 months cliff, and let's say 24 months vesting, and then I see KLs that are getting 25% unlock on TG, I'm asking my question: what is going to be my token price?
Yeah.
Once I'm going to start getting
period is finished, right?
Exactly. And everyone else will dump their token. And yes, I understand the founders need to lock up because investors want to dump. But then how am I going to make my money? How am I going to show, okay, we don't have LPs, we invest our own capital. But if, let's say, we had LPs, how will I show my LPs returns if I invest, let's say, at the $1 token price, and when I start getting my unlocks, the token is worth 20 cents. And because of this lack of liquidity, bad tokenomics, bad market, investors are not investing. They're very, very kind of scarce to invest. So majority of funds that are still investing are those bylaws prevent them from changing their investment thesis. So there are certain funds that must invest in token-based projects. One of my friends, we're talking with their LPs, like, hey, like there is no good projects to invest in. Can we change our strategy, just like go long in Bitcoin, like some other tokens, and do some more liquid? Like, no. That's not by law, we're not changing it. So those are they're kind of mandatory to invest, but all the others who can wait, they're just waiting it out and seeing what's going to happen. Because it's the way everything is structured right now, it just doesn't work. How can we do it better? I don't have the answer right now. If anyone, especially founders or tokenomic expert, can find a way how it would be beneficial for both, and founders and investors, I think those people are going to do very, very well in the current market. And to answer the second part of your question about the narratives and trends.
Sure.
So even though right now we're not actively investing, we're still looking at certain narratives, and there are still sort of companies we're kind of considering. Number one thing that we're looking into is this magical word called revenue.
Yeah.
And not token price, not token, but actual revenue. Actual profit. So another way how we see that industry is maturing, investors care about companies that are actually building a product that is being used and is generating revenue and profit, because last few cycles, especially the cycle one and before, owners knew that their product wasn't the actual product they're building, but the token. The token would be the product. As long as we pumped the token, I was going to be happy. Okay, well, it's not the market anymore for that. So we're looking at companies that are generating profit. So majority of them are focused on B2B, right? B2C as well, but B2B are majority of them. And we're looking at the companies that are doing such a niche but very, very important solution to a problem that is not going to be affected by all the macro.
Mm-hmm.
And one of the examples, not to sound too cryptic, is anything related to stablecoins. So it wouldn't be the stablecoin product itself, but it would be an industry, or a product is benefiting from the increase in stablecoin usage. Because right now we see more and more are using stablecoin just because of them not to enter the space. Because up to like March of this year, we saw a very nice correlation between increase in stablecoin market and kind of increase of whole crypto ecosystem, especially altcoins. So we can kind of predict that stables were used to enter basically crypto and kind of as a first step, and then they would be sold just to buy whatever tokens. Whereas right now, especially for cross-border payments, among others, people are using stablecoins.
Mm-hmm.
So we're looking into that a lot. We also are looking in infrastructure plays, anything to make the industry better, faster, more secure and stable. We're definitely looking into that. We're looking into any businesses bringing Web2 to Web3, and that can be very broad. Ideally with a proven track record in Web2 space and with very clear signs of revenue and how they're going to make money. So right now, if I meet a founder, I start pitching me, my first question is, especially if they're not pre-seed, they're kind of a little bit later, what's your plan to have revenue? What's your plan to be profitable? That's what we're looking into. Or even a bit more established companies in Web2 that want to add a Web3 angle, and they need just a bit more capital.
Actually, sounds like, the market is growing. And I love the statement that you said about regulations, and what did you said about narratives, that we see that coming from Wild West that was here a couple of years ago, we're already getting more to kind of established industry.
Yes.
And right now investors are looking, as you said, at profits. Investors are looking at how your actual workflow has been built. What's your future plan? How you plan to make a real business? Because before that, it was really a big joke in this market that everyone was trying to make a product just to make a token for that.
Yes.
But then the meme coin narrative actually broke this entire structure, because you shouldn't do something to pump the token right now. You can just launch the token and then play around with your marketing and try to, penetrate your idea to people's mind. And so now when it comes to the product, it should actually be useful and have, some implementation all around the market. And then it works.
Oh, 100%. One interesting piece of statistics. I saw it, I think, beginning of this year, so it might be a little bit outdated, but it's very still relevant. There was a pie chart of how many people made how much money from Pub Fund. So take a guess, how many people made more than 1 million from Pub Fund? And again, that's a number of end of last year, beginning of first year. Dimitri, take a guess. How many people made more than 1 million in Pub Fund?
Is it above 100 of people or less than hundreds of people?
200 people.
200 people. Yes, always random ideas. And and how many people lost their money?
Unfortunately, no one is talking about it. That's not part of the business model.
I can guess that there are millions.
Yes, exactly. So yes, memes were a great narrative that basically community is in charge. The problem is with media. Media would take these few outliers that were making crazy returns. Let's say a 16-year-old kid made 200,000 overnight, and then repay their parents' mortgage, whichever. Yes, there were cases like that, but there are also cases people are winning lottery. And honestly, I feel like making money with memes is like making money in casino. It's very very risky, and you have to be careful with what you're doing, and you shouldn't be following these success cases of these few people that became basically lucky.
You just literally quoted my recent public speaking appearance on this stage where I was speaking about meme coins, and it was quote unquote meme coin market is the actual gambling. So
Yes.
I see that we are on the same page, and I love that we're clicking on this stuff. And yeah, basically like but it kind of shifted the market. Right now, we already see that there is just, you either do something high quality and properly built, or you don't get money, you don't get users, you don't get tractions, you're just out of this market.
Yes, but did it shift for the good? That's an open question. So imagine if all of that liquidity, and there was huge liquidity was coming into meme coins, billions of dollars, would have went into DeFi, would have went into infra. What would the market look right now if all of these DeFi products would have capital, would have money? We would probably had an altcoin season by now.
Yeah, that's fair. That's fair. But like if we're gonna talk about that in this case, like what if it would never happen? Like it already happened. And we see that. I personally think that this, entire meme coin wave was just very, very fitted to what people have in their mind. Like, in era of quick content and people just being crazy about getting something which brings them fast dopamine with the boom of gambling all around. That was, it just a narrative thing that put to people's mind, and they were extremely happy about it. Is it good? I don't think so. Is it what we have? Yes. But like, it is what it is. But let's maybe come back to the actual project topic. I think we already kind of covered it, but maybe you can just state it in one sentence. What makes a project truly backable from investors' perspective?
You really want me to answer it in one sentence?
I mean, because we already covered it in a very long pitch. So if you can just try to adjust it to one sentence or to, like a couple of sentences, it would be just perfect.
I feel like I feel like I don't even answer this question. So let me kind of take a step back, because this is a key I think this is the key question you asked so far that a lot of founders fail to understand. So what is a backable project? So first of all, what are they doing? They're trying to raise capital on what? On idea. Especially if we're talking seed, pre-seed, like early stage, when there is no product, anything before Series A, there's almost nothing. There is some sort of maybe MVP, some sort of idea, some sort of initial traction. So what are they raising money if there's no product? They are raising money basically on themselves. They're raising money by saying, hey, I'm Laura. You should trust me. If you give me this 100,000, I'll make it 1 million within XYZ amount of time. Because again, what investors want? 10x returns. Yeah. I mean, they're not saying that, but that's what they're expecting. So what does it mean when investors are expecting these huge returns? That means they're looking at the person saying, is Dimitri smart enough, connected enough, qualified enough, and has what it takes to hustle to make those multipliers, to get the business from where it is right now, with basically in the trenches, to the, big, successful billion-dollar business. And that's kind of the key question. And you as a founder, if you're pitching, you have to think about this one thing. How are you going to convince an investor that you are that founder, that you have what it takes? And now we come back to the actual things, how are you going to do it? So first of all, your experience. You must have experience in this space. Tier 1 project experience. Go to CoinMarketCap, look at top 20, 30 projects that are right now, go work for them. Go look at the biggest service providers, go work for them. Look at the biggest exchanges, go work for them. Have previous experience. It's not 2016 anymore, not 2020, 21. You have to have experience in the space. It's not easy money. And even when Web2 guys or trad guys come to the space, I'm saying, get a crypto co-founder, otherwise you're going to be struggling. Because it's very, this industry just works very differently, and you need to experience it for a year or two to be successful, to understand how it all works, all the power dynamics. Number 2, besides the experience, is what is your, I call it unfair advantage. What it is that you have in terms of connections, know-how, that gives you this unfair advantage. Have you, for example, worked in specific space? Let's say you were in market maker for many years, and now you have one of the top market makers helping you to launch a token free of charge. Or their founder is going to be the one taking care of. Maybe all the exchanges are on your cap table and they're going to make sure you have the best token launch. Maybe you're friends with Dragonfly Pantera and you have them on cap table. What is that unfair advantage you have that can set you apart of others? Because in the end, either you pay money to get there or you just have it. Same thing with Kels. Maybe your best friend is one of the biggest Kel, and you know they're gonna promote you, pardon my French, once you're gonna go into token launch. So what it is that you have that you don't need to spend money, but the upside is huge. That's unfair advantage. It's very, very, very important. Number 3, is your business nice to have or must to have? If I see right now another AI agent, I just ignore it, because would I need another agent? It's not. It's just a GPT wrapper at majority of cases. Your product needs to be solving a very, very specific problem that is burning. Like why Hyperliquid was so successful, because everyone wanted a good DEX to trade. Like they needed that. Why, for example, even Chain launched quite okay in this really bad market, because they had this interesting meme angle. They were focusing on their community so much. There were so many products that were already built on Chain before it's even token launched. So like that was an fair advantage for that layer 1 compared to others, because they had so many projects launching in. So you need to have some sort of fair advantage and must to have business case rather than nice to have. Another very important thing is a very, very good understanding on where your business is going and how you're gonna not just do a token launch, but sustain the token price. If you're raising not on equity, but on tokens, majority of founders focus only on one thing, token launch. How can I do token launch? Yeah, but I'm gonna get my token 6 months or 1 year after it. I don't really care about how your token launch is gonna be. I care about how the token is gonna be doing 6 to or whenever months I'm gonna start getting that. So, and again, it's not fair, but this is this business, not charity. It's not a grant. Go to ecosystem. They'll pay grants and they don't expect anything in return. So how are you planning to sustain the token price? What are you doing? And how your tokenomics are structured as well. That's very, very, very important, especially in this market. And also don't have crazy valuation. When I see pre-seed project without a product with $50 million valuation, I'm like, okay, I love the energy. I love that. You should value yourself a lot. But so once you're gonna launch, if you launch at a 50 mil, that's breaking even. So if I'm thinking I want to make at least a couple of multipliers, it means you need to launch at what, $200 million valuation? $300 million?
No.
How is that sustainable? And then especially, or if you're raising a later rounds at like 250 or 100 to $50 million valuation. So for investor just to make, let's say, 4x, which is not even a good return for a venture capital firm. Again, it's a venture capital, it's a high risk, high returns. You need to launch at $1 billion. How many projects launch at $1 billion market cap in the recent year?
Count on fingers.
Exactly, and actually sustain the price.
We cannot even count.
Exactly. So, and it looks counterintuitive, but founders still fail to understand that. And that's why a majority of VC, those who can, they're not deploying. They're waiting for better days. And they want the market to kind of plateau a bit, kind of have some corrections, and then start to deploy. Because right now, just buying Bitcoin will bring me more return than betting on founders.
And I think it sounds like a great piece of advice for all the new founders that are trying to deploy their products to the current market. It's not to stick to the rules of previous cycle.
Yes.
The market has changed. So, be flexible, adjust to the current status of the market. Maybe you have any other pieces of advice for new founders or for somebody who's trying to launch this cycle? Like, what will be top tier advice from your side in order to make them kind of be successful?
Key piece of advice is focus on relationships. Focus on building genuine relationships with the ecosystem, with your partners, with market makers, with KOLs. Genuine, and key phrase, genuine relationships. Don't be transactional. So before I went full into VC, again, I had a marketing agency and I was on the sell side. Basically, I would be selling services. Again, I was a founder, but still, I was on the sell side. And of course, when you're in a marketing agency, not everyone cares about it. Some people dismiss you. That's the case. The moment I posted on my LinkedIn and started working first in one fund and then later at Gate Ventures, you know how many people who left me on red came back saying, "Oh, congratulations. Let's grab coffee. Let's go for lunch. Let's do this and that." And I'm like, "But where were you when I was reaching out to you?" So
Yeah.
now when I'm in a position of power, you're interested in having a relationship, whereas when I was no one in your eyes, you didn't. Do you think I'm going to help you out? Of course not. And this short-sightedness is a very, very big problem in this space because everyone is super transactional. And if you're going to continue being transactional, it's going to be very hard for you to build genuine relationships and get something. Because the worst thing when you're a VC, you go to an event, and the moment they hear you're a VC, they start pitching you. Everyone starts pitching you and expecting something from you. And yes, that's my job. I need to listen to pitches. But when you listen to 30 pitches, per
Per
day,
minute.
if they could, probably would be 30 pitches per minute. Like, you get tired. You can't physically give time to everyone. So you start prioritizing. And you feel like someone has only one agenda to take. You're not going to put that person on your priority list.
That's fair. That's fair. And it's visible all around the events. You just come there. If you see some panel for VCs or whatever, people are catching the founders, catching the employees of VCs from the stage and trying to pitch straightforward. And I just look at them being like, guys, are you crazy or something? Just imagine what's the outcome of what you just did. It's pointless work. You won't have anything from it.
Yes.
And so I love what you said about how transactional the relations in the market became, because, before that, it was, a very close community where everyone just wanted to share their thoughts, be kind of, friends. And right now, when they see some big title in your name on your LinkedIn, and I really understand your thing with LinkedIn, because, when you switch from somebody who gives services to somebody who takes services, they all appear in your DMs being, hey, bro, haven't talked to you for 2 years, was ignoring all your messages when you're reaching out to me, but right now I want to become your friend, mate. And I'm like, why? And, it's such a ridiculous thing. So I think that's a great piece of advice. I would quote it like that. Don't be transactional, guys. Stop this thing. Let's be real. Let's be friends. Let's keep the community a community, not, just, group of rats trying to bite each other.
Exactly. Like, it's a people business. Fundraising is people's relationship. Build a relationship with people. They need to trust you. And if the first thing what you're hearing from you is a pitch, again, I'm not investing in a pitch. I'm investing in a founder. Let's kind of rewind what I was saying before. We're looking at the founders. Is this the founder that we trust is going to take that 100, 200, whatever, and we're going to invest $1 million and make it 10x? So I'm looking at the person. What is their character? How do they behave? What's their personality? Do you have great hustle? Do you know people? Especially in seed stage, like very, very early stage, when there's nothing else, it's only the founders. So you're backing the people. So how can I know who you are as a founder if you don't even show it? And the first thing you tell me is basically you're being transactional. So what is the image I'm going to have of you? How are you going to do your business?
No.
And if you're building business without integrity, this business is not going to be successful.
That's very fair. I love this statement. And, I think you're the first person on my podcast who actually mentioned this thing. And it's very, very psychological for this industry. And, it's extremely cool that we touched such a deep topic today. And we're already running out of time. So let's maybe finalize with also very interesting question from my side, which I think is extremely important. And it's all about education. Like, how do you feel about importance of education in 2025 in our industry, and what role do platforms play in empowering education and teaching people how to properly behave in this market? And maybe some pieces of advice from your side for somebody who is new, or for those who is already for a long time in the market but still don't get this catch of the proper thing, how to get educated correctly and how to start filling this market from the inside, from, psychological point of view, from philosophical point of view, from trading point of view, and so on and so forth, as you do it right now?
It's a very good question. So when it comes to, of course, education is very important. Without education, you're not going to be successful. The key thing when it comes to knowing where to start is crypto is very, very broad. There are so many things. You can, be a market maker, work with exchanges. You can be a KL. You can be a founder. You can be a developer. There is a huge plateau of potential things you can do and things you want to learn. Key thing is being very, very clear to say what you want to learn. If you don't know what you want to learn and you're like listening here and be like, yeah, I want to just come to crypto. I don't know anything about crypto. I want to start reading Cointelegraph, start reading CoinDesk. What I would recommend to do is go to one of these websites, or like the blog is good as well. There are a lot of them, basically. Let's take, I know, Cointelegraph. We have a very good relationship with the guys, that's why I'm gonna be a little bit promoting them.
Shout out to Cointelegraph.
Yes,
I love you guys.
And turn, like, just open one of the first articles that don't look too techy, like more like industry news. Start reading it. And as you read, you start seeing the words that maybe you haven't heard before. Start Googling those words. Use ChatGPT. Just start reading articles. And then if there is some kind of paragraph or thesis you don't understand, we have ChatGPT or Grok or whatever you're using, DeepSeek. Put it there, ask it to explain it. But start just reading news, because it's a very easy way to start consuming kind of industry content. And it's where you just copy paste, ask for explanation, and then basically get it. So that's kind of the easiest way. And then as you start reading, you start understanding certain things, having questions. Oh, I read about this like bridging. I don't understand how it works. Or what is this zero knowledge thing? Like, I don't know, I want to read more. And then as you're going to start reading more, you're going to have more questions. And those questions are going to lead you into this rabbit hole of like huge understanding.
Yeah.
Like, literally, first thing is just opening one article and start reading it and start analyzing. What are you reading? How do you interpret? What does it mean? Let's say there is a merger of two companies. What does it mean? Why it's relevant? Ask again, ChatGPT is amazing. Why is it relevant? Or for example, there's a token launch that did very good. Ask ChatGPT, why do you think this token did very well? Then use CoinMarketCap to look about this token. What narrative is it? Again, you can use ChatGPT to say, okay, I want to learn more about this specific, let's say, narrative. What are the questions I should be asking? So basically, just start reading and then asking ChatGPT. I wouldn't recommend going to Twitter first, because again, Twitter has too many polarizing opinions that I don't personally agree with some of them. And if you don't know what's right, what's wrong, and you don't know how to interpret that information, you might get caught in learning something that's, for example, false or incorrect. So news, at least, it's kind of black and white up to a certain point. At least it's a little bit unbiased. So start doing that. Use ChatGPT and just kind of start there. And if you're a seasoned already professional, being in this space many years, conferences, that's the only thing. It's going to meetups, conferences, and just talking to people. My best piece of advice for those who still like don't get it, like there's a thing that they're just like struggling to kind of have, that aha moment, is to go to a side event and start talking to people, asking what they're doing. And then based on what they're doing, let's say they're building, I don't know, a lending bar protocol. It means you know everything about lending bar. They can tell you about that. If let's say they're building a DEX, they know probably everything about DEXs. So just find people who are building in that specific narrative that you have questions. And the other thing is, majority of them will genuinely be happy to share it and talk about it and educate you.
And this is the key thing. And I also really like the statement that, people who really know what they are doing, they love to share.
Yes.
And, when you don't understand, don't be shy. It's not going to be the thing that, you're going to be rejected and people are just going to tell you, oh, you don't understand anything. No,
Yes.
People are willing to explain complex things in simple words.
Yes.
This is like one of the greatest, statements about how you can develop in this market. And you basically just explain how I was personally doing it while, starting my career. So I really love your approach, and I see, a bunch of similarities in it. And basically, this is just an amazing thing. And we are already coming to the finish of our podcast. So what I would love you to share at the end is, like one sentence that should be stated as the finish of our podcast, something that should go straight to people's mind and, remain there.
We already talked about it. Don't be transactional.
Don't be transactional. Guys, that was an amazing podcast. Laura, thank you so much for being here with me today. Remember, on Kolo, we show faces, not just talking to spaces. Have a great day, guys, and hear from you soon. Cheers.